I'm 21, a student, and I've just crossed £5,000 in my portfolio, and I only started in late 2024. In this video, I'll show you exactly how I'm building my wealth as a beginner in the UK, where my money goes each month, and why I'm thinking of the long term even whilst I'm studying. Hey everyone, I'm Ollie. I'm currently a student studying as an engineer, but I've always been interested in money, savings, and now investing. I started my journey less than a year ago, and I've been documenting it ever since. So if you're into long-term investing, UK stocks and shares, and building wealth from the ground up, definitely hit the subscribe button. So I got started in late November 2024, just after doing a ton of research into ISAs, ETF and compound interest. I didn't have a lot of money, but I started small. Just a few pounds a day. I lump summed in around £1,000 and then was adding just a few pounds a day where I could. The key thing was to try and stay consistent. I now invest around 200 to 250 a month, and I throw in lump sums where I can when there's a market downturn. Fast forward today and I've just passed 5,000 in my portfolio, which feels crazy considering I started with zero less than a year ago. So let me break down exactly what I'm invested in. I've split my portfolio into 4 pies at the moment, and they each serve a different purpose, and I'm investing around £7 to £8 a day in total, and each pie gets a fixed amount each month. So let's get into the breakdown. So this is my portfolio. As you can see, I've got around £5,200 in there now, and as of today, I have a total return of around £634 and a rate of return of 20%, which I'm very happy with. And as you can see, I only started in early December to late November. So it's been a great journey, and it's had a few ups and downs, but overall, I've really enjoyed it. But as my portfolio is split into 4 separate pies, the main one, this is the one that I intend to invest into for a long, long time. And this is because it's full of ETFs such as the S&P, the Nasdaq 100, the FTSE All World, and so on, so on, so on. There's a lot of overlap here, but overall, I'm very happy with being weighted towards America, as this is where most of the money is made in recent history that we've seen. But I also have a few other things in here, such as the Income Shares Gold and Yield. This is a bit of exposure to gold, which I'm very happy with. And Legal & General is a company that I've held for a long time and thoroughly like this one. It's a good dividend payer. Moving on from that, I have some more income shares. These are ETPs. These are quite high risk, but they pay large dividends. I also hold the underlying of each of these. So as you can see, I have Alphabet, and then I have the Alphabet underlying, split as a 12% of the income share and 8% of the underlying part. So I have 5 different companies in here, each holding 20%. And that's split across Alphabet, Coinbase, Meta, Nvidia and Tesla. And it's important to understand that ETPs can be very, very risky, and you actually have to do a competency test before you can get into these. So it's worth looking at, but as always, this is not financial advice, so please consult your financial advisor if you're ever thinking of doing something like this. I didn't have an investment pie. These are 2 stocks I'm very, very bullish on. AMD and SoFi. So far, they've had great returns, almost 50% on each of these. But as you can see, there's not loads of money in there because I don't want to go all in on single stocks, as that can really increase the risk of your portfolio, and I want to keep this rather risk adverse. And then finally, we have a new pie that I've started very recently, which is quantum computing. I picked the 4 companies here. I've got Rigetti, Quantum, Ionic, and D-Wave. These are 4 companies that are going to be big in quantum computing, and I think this could be the next big thing after AI, and it's not that far away. This is my smallest new pie, but it's very relatively high risk. I'm not willing to put loads of money into this at the moment, and as you can see, I'm already quite down on some of these, as I brought in just before Friday, so I've lost a little bit on these. And then finally, we have a single stock. I hold a few single stocks every now and then, and this is BYD at the moment. Currently, it's down quite a lot, but I have strong feelings about this one, and I think we could easily turn back to all-time highs back here, so I'm going to hold to at least then. But the most important thing here to consider is the way I invest. So each day I set an amount, so my main one has £4, and the other 3 pies each get £1 per day, so I invest around £7 per day. Not a lot at all, but over time that adds up to almost £200 a month. So now looking back at that, the reason I split my portfolio this way is to balance long-term safety with a little room to learn and experiment. I'm not trying to time the market, I just want to stay consistent, low fees, and build habits that now, whilst I'm young, that could help me in the future. If I keep investing $250 a month, even with no lump sums and an average growth of 7%, I can end up with over $200,000 in 30 years, and that's just by staying consistent. As I get older and my income increases, I'd like to increase how much I put in per month up to $500 or $1,000 per month, and who knows where that could go. But ultimately, I think investing is very key, and the earlier you start, the better. So I've got a few tips for other young people and students like myself. So start small, stay consistent. Even £1 a day does add up. It doesn't sound a lot, but it really can make a difference over time. Make sure to use a stocks and shares ISA. I made the mistake initially of just using an invest account, and this doesn't have the tax-free benefits of a stock and share ISA in the UK. Automate your investing, so put a lump sum into your account and then just allow it to trickle into your things, and dollar cost averaging is very helpful, I found. Be very careful with high risk assets, so going for single stocks or something like ETPs can be very risky, so I personally like to try and keep this a small part of my portfolio. And focusing on the long term, you need to not panic in sudden drops such as Trump's tariffs. A lot of people panic sold, and that for me was actually a time when I brought, and it's really helped me. Now this is just a short video and just a bit of an introduction to myself, but that's how I'm investing as a 21-year-old student in the UK. If you're on a similar journey or want to start building a similar portfolio, hit the like and subscribe, it will be a great help. I'll be sharing regular updates, deep dives into each of my pies and lessons I learn along the way. Thanks for watching, please like and subscribe.